Hey, what is going on, guys? My name is Chris and welcome back to another video. If you're new around here, which you most likely are because I think this is like my third video, I am currently making YouTube videos all around kind of my personal finance and my investing journey. So I think I mentioned in one of my first videos, I began investing into the stock market in March of this year, directly after the stock market crash. So I saw it as an opportunity to start investing into the stock market. So I signed myself up to Trading 212 and I started my investing journey. Now I watched hundreds and hundreds of YouTube videos talking about different portfolios, what to invest into and what not to invest into, and I spent a lot of time kind of thinking about where I wanted to invest my money and which stocks I wanted to invest in. So the whole reason for this video today is I'm going to be taking you through my portfolio, going through each and every stock and share that I'm invested into, and kind of a little bit behind why I'm investing in them and why I see this as a company or an ETF to invest into a long term. So if that's something you're interested into, this will be today's video, and like I said, I'll go break them down into each individual stock, and I'll give you kind of an overview of where my portfolio is at the moment and kind of where I want to take my portfolio and where I'm going to be investing. Like I said, I use the app Trading 212, so let's jump into the app and I will show you my portfolio.
So now that we're in the Trading 212 app, I can give you a bit more detail into my portfolio. So just the overall, obviously, just to give you an idea of my investment return. As you can see, if you'd seen my first video, you would have seen hopefully a little bit of growth there from the previous time that I showed you guys this. As you can see at the moment, we're sitting on a comfortable 14.56% return. And now if I was to compare that to the S&P 500, which is the index that tracks the top 500 US trading companies, we obviously know that there's sort of an annual return of about 7%, 7 or 8%. So at the moment, sitting at 14.56% is a good return that I'm very pleased with at the moment, and everything's sort of heading in the right direction for me. As well, if I'd taken that same money that I've invested and put that into a savings account, I mean, well, we'd have had a 1% return if we were lucky. So sitting at 14.56%, I think, we're going in the right direction. But the whole point of this section really is just to kind of give you sort of a bit more detail on the individual stocks that I actually own. So the first investment that I have here is 3M. Now, obviously, I've only got half a share in here, so there's not a lot of shares or a lot of money that has been invested into 3M. But 3M for me is a company that is a dividend yielding company, so a company that pays a certain percentage back to its shareholders. And 3M is one of those companies that I see as a company that's it sort of will stand the test of time. It says it's a technology company, but kind of it works across so many different sectors and segments, especially sort of the electronic segment side of things. And actually, from a personal perspective, I used to work for a company that used to source 3M products. So that's for me is a little bit more of a personal reason, sort of knowing and understanding the company a little bit more. And obviously, I'm comparing things like its PE ratio, looking at its dividend yielding percent at 3.64%. I'm obviously not always looking for the highest dividend yielding companies. I'm looking at companies that have good revenue, have good balance sheets, companies that I believe in. And again, 3M really fits in with that one. Again, like I said, I only hold 0.5%, so not even a whole share, but it's one that I'm going to be increasing over time. And I see it as a company that will be a dividend yielding company that will be part of my portfolio to increase my dividend return month on month, or at least every quarter. So that's kind of the way I see this company kind of being sort of a slow burner in my portfolio. As you can see, we've got a slightly below return of about 2.5%. But like I said, for me, I see 3M as a technology company that's kind of always going to be around and has always kind of paid its dividends to its shareholders. So for me, I'm going to be holding this for a really long time and will be increasing my position over time. But again, I've been focusing on probably some other stocks in my portfolio, as you will later find out. So the next one is Accenture. So Accenture is a company that I'm quite excited about in some ways. So Accenture basically is a service-based company that works with a lot of different industries and sectors, most notably like banks and technology and finance sector. So I'm quite interested in finance just generally, but working with banks, this company is one that has been growing over time, even before, as you can see here, before the crash through the virus. You can see it was a stock that was growing over time, and that was just due to its increased popularity, its client base, it's including its revenue, and a company that has been growing year on year. And so if I go actually down to their balance sheet over the last few years, you can see over the 2017, 2018, and 2019 that they've been growing over time really well. So this is a company that I kind of see great potential in. Essentially, what they do though is they basically a service-based provider that work with sort of banks and financial companies to embed and improve technology processes within the company. So, for example, like banks, for the most part, are kind of quite outdated. If you think, we go to with all the technology that we have, with all the kind of online banking that we can do now, and all those kind of things, we still have like ATMs and people going to a hole in the wall and getting cash out and doing checks and all that kind of stuff. And the way that the world is moving, we're moving obviously to a lot more online based, working with sort of online apps, online banking, and essentially are helping banks and financial companies and lots of other sectors kind of work towards that and really bring in technology processes into the company and work on various different sort of industries and client base. So I really see it as a company that's going to continue to kind of grow and work with companies as they need to progress and alter the way in which they work through technology. So that's why I've included Accenture in here. And since I've been investing in them, they've slowly given me a positive return of nearly 7.5% there. Again, like I said, I haven't quite got a share in there. I've initially really focused on making sure I've got some spend or some amount of money into each the company that I want to invest in, and then slowly over time increase the amount of shares and stocks that I have invested in those companies. So that's kind of where Accenture is at the moment. It is a dividend yielding company, so although it's not the highest percentage return at 1.43%, it still sort of fits into that category of sort of a dividend paying company, and one that again I will continue to pay into and increase over time. Then Google, I mean, there's no real introduction I need to give here in any detail. Google is Google. Alphabet Inc. is obviously one of the biggest tech companies out there at the moment. For me, in the industry that I work in, Google is a big player in the industry that I work in, and a tech company that is continuing to grow and has completely rallied since the virus back in March, and has gone on to new actual stock heights at one point as well. And with obviously positive earning reports in the last couple of months, the stock has continued to return really good. At the moment, I'm sitting at just over 11% return on my initial investment. Again, I've only got a small fraction of shares. I think that's one of the good things about trading 212. Allows me to kind of just invest small fractional shares into companies that I want to. Because obviously, if I was to buy a whole share in Google, it would kind of count me out at the $1,480 mark. Is a company that is less accessible to sort of new time stock investors and new valued investors who maybe don't have the funds to kind of buy a single stock. So that's really it with the Google. It's a company that we know that's going to grow, that's going to be around for a long time, and hence why I want to invest my money. And again, like I said, it's something that I have some experience with, and Google is a company that I just generally believe in. So hence why they're in part of my portfolio. And then again, next is Amazon. Again, a similar situation. There's no point me going into any detail about Amazon and who they are, but essentially, obviously, they've had a massive boom since the virus, with everything going on, people being indoors, having to shop online, and buy things online has meant that Amazon has really done really well based on everything that's been going on, and hence why their stock price has just skyrocketed up. I bought into it just based on that, really, knowing that it was going to be a company that was going to have benefit from the virus and everything going on. And that's why at the moment I sit at just a little bit over 22%, nearly 23%, with a return of about £7. Again, like I said, it's a stock that I have a small percentage in. Again, if I was to buy a full share in here, I probably wouldn't be able to. So I'm just sort of investing smaller bits of money, and over time I'll increase that. And I see Amazon kind of being a major player, especially moving forward, and the technology involved there, and the way that people shop online. I see Amazon being a major player in that space for a very long time. Hence why I'm going to be investing more over time, and why they're in my portfolio. Then moving down to Apple. Now, I think I mentioned this in my first video, but Apple for me is my favorite stock, or my favorite company, I should say. I am very much into Apple. I believe in their ethos. They're a company that I can see sort of growing over a long period of time, and a company that I feel that I want to put my money into, based genuinely just on emotional and sort of previous experience. But at the moment, I sit at 1.5 shares into Apple, which will be increasing, obviously, with Apple announcing that they're going to be doing a stock split in the next couple of weeks, months' time, with the 4-1 split. So I will be obviously increasing my shares. Obviously, I won't be increasing my returns anyway through that, but at least I'll have a few more shares. And again, you can see it from a return perspective, 30%. I've had some really good returns so far with Apple, most notably because of their most recent financial revenue, sort of end of June, saw a massive increase in their revenue, which was to be expected, but probably did better than expected, hence why the price of their stock went up so much. And again, a small dividend yielding company with a 0.83%, but for me, Apple wasn't a dividend yielding company that I wanted to invest in just for their dividend, but I saw it as a potential growth stock, and definitely a company that was going to be around for a very long time. And as you can see, just looking over time, Apple stock has just continued to grow over and over. So moving down to Coca-Cola. Now, I genuinely only really invested in Coca-Cola for their dividend. Now, I wanted to kind of have some dividend assurance companies in there, that companies that over a long period of time have paid their dividend to their shareholders, haven't cut their dividend, and really stay true to that. And Coca-Cola is one of those. It's still meant to be seen if they do stick with it. I think they will, for obvious reasons. I think the ethos really is to focus on kind of giving back to their shareholders. But I think we're in uncharted territory with them. I think obviously there's been crashes before, and the 2008 housing crash was a big one, but it didn't stop Coke being sold, or Coca-Cola being sold in restaurants and in going out and those kind of things. So it will be interesting to see what happens. But for me, it's a stock that I will be holding for a while, just based on its dividend yield returning. As you can see, actually, with Coca-Cola, you can see that actually over time, the stock has risen slowly, and especially since I've held the stock over the last sort of 3 or 4 months, it's really sat at that 46 to 47, 48 pound. So it's stayed pretty sort of consistent and flat, really, over the last sort of 3 or 4 months. But hopefully over the next couple of months, once everything gets back to normal, and restaurants and shops and things can reopen, that hopefully we'll see Coca-Cola make a little bit more of a comeback. Again, I nearly hold 3 shares into Coca-Cola with just a negative return there of £3 at 3%, which is actually one of the very few companies that have a negative return at the moment in my portfolio. But like I said, I'm really in it for the dividend return so far. So good with that one with Coca-Cola. Again, with McDonald's, obviously McDonald's is a huge restaurant franchise, and a company that has been around for a very long time. Nothing too fancy with McDonald's, if I'm honest. We know that it's going to be a company that's going to be around for a long time. that isn't going to go anywhere anytime soon, and a company that a lot of people know about. Financially, I think it's a company that's strong. They've got a good structure there, and a company that I don't see going anywhere anytime soon. So a fairly safe bet, in my opinion, when it comes to investing. As you can see, I've got just over a 2.5% return there, with about 3.46 return in total. And I mean, it's a dividend yielding company again at 2.52%. Again, for me, it's not about how big a dividend yield percentage the company offers, but more about, is it a company that I can see keeping their dividend and making sure they continue to pay their shareholders over a long period of time, and a company that's going to stand the test of time. And for me, McDonald's fits that. Again, nothing too fancy with them, nothing sort of I really wanted to invest with them. I just felt that they were a safe bet. It was a company that I knew something about, and they were a dividend yielding company that returned a decent rate that I just felt was a safe bet to invest. And as you can see there, I've got just under a share. I did intentionally try to buy one share, but for some reason, when I tried to execute the deal, I didn't quite have enough when it came to from when I placed the order then to execute. Anyway, I ended up getting this sort of 0.9% executed share price. So I will kind of increase that to one share very soon, and keep increasing that over time. Then moving down to Pinterest, which is a bit of a random one for me, if I'm honest, and a stock that I invested genuinely out of my own interest and my own sort of thoughts, and kind of sort of how I saw the market going. And genuinely, it's probably one of the very few stocks in this portfolio that I haven't done lots of research on, that I haven't kind of watched countless YouTube videos looking at why I should invest in them, and the benefits of them, and how long, what kind of return I can get into them. But essentially, it's just a company that I have some relationship with in the industry that I work with. Pinterest is a major player in the industry I work with, and I kind of saw that they were a company that could benefit from everything going on at the moment. Obviously a lot of people are thinking stuck at home, so they're thinking about redoing their house, sort of home decor, kind of improving what they've got, their garden. And a good place to get inspiration for that kind of thing is Pinterest. And obviously from their ad product, with the increased users that they've had over the last 3 or 4 months, and then their increase of the use of their ad product, they've been able to kind of increase revenue. And as you can see here, I think in their latest statement and income statement, so you can see that they've surpassed what they intended as well. So that's kind of why you can see such a big return. And as you can see, I mean, I've got 119.24% return. So I've doubled my money when it comes to Pinterest. Like I said, from a sort of a technical looking at numbers, there really wasn't any. I just felt there was a hunch. I had a hunch that it was a company that I saw had potential to grow, especially now. And again, a company that I think social media platform that will grow over the next coming years. Hence why I've invested 6.345 shares in them. And actually was one of the very, very first shares that I bought when I started my Trading 212 account. Then moving down onto actually my second buy for the Trading 212 account was Southwest Airlines. As you can see, I've got 6 shares, and is the biggest dent negative that I have in my portfolio to date, with a 9.71 negative percent there at £17.43. So obviously everyone knows how the virus and everything going on in the world has affected airlines. Everyone knows that flights have been cancelled, people can't travel as freely, and it's really affected the airline industry, especially in America. Now, I knew that was going to happen when I invested into Southwest Airlines. I knew that they were going to be hit hard. I knew it was going to affect their stock price. I knew all that. But as I've said before, when I first started to invest, I wanted to invest for the long haul. I was investing for a long period of time. I wasn't thinking next 3 to 6 months or even next year or two. I was thinking sort of 10, 15, 20, 25, 30 years down the line. And so when I was doing my research and thinking about companies that I wanted to invest in, and kind of, I suppose, trying to take advantage of what was going on in the world, especially when I first invested in them in March, just after the crash, I wanted to make sure that I was investing in at least a company that had potential to survive. I knew that it was going to hit them hard. So, the research that I'd done, looking at their balance sheet, looking how much money that they had aside to cover, how much debt were they in, those kind of questions I was asking myself to make sure that they had enough cash on side to kind of cover some of this, and if they had to get bailed out by the government, that they would survive over a long period of time. And Southwest Airlines, after the research that I'd done and had a look, was probably the best place to sort of survive the crash. They had the least amount of debt, they had the most cash on side to kind of weather the storm as much as possible. Obviously, we knew that no matter how much cash that they'd have, there would be some impact. So I was fully prepared for the stock to drop. But I see Southwest Airlines as being a company and an airline that will be able to survive this and will flourish in years to come. But I'm more than happy to hold this stock for 5, 10 years. I'm not really bothered. I'm in it for the long haul with this one. And I mean, when it comes to flights, I think Southwest Airlines really focus on domestic flights. And if any air flights are going to get back up and running first, it will be domestic. I think it's the international flights, especially sort of American Airlines, that will be the hardest hit and take the longest to get back to normal, or at least get back to a kind of a way of producing revenue. So for me, Southwest Airlines, the good balance sheet, they had the most cash on side. They focused on domestic flights, which were more likely to sort of return quicker than maybe international flights. So yeah, I mean, like I said, I know that I'm not going to have a negative return for a little while, but I'm in it for the long run, and I see it eventually being a stock that will return a good investment. Then moving down to Tesla. God, this is really long, isn't it? Going through for each and every one of these. God, I need some water or something. Okay, so moving down onto Tesla. So Tesla, I mean, I don't really need to go into too much detail with Tesla. Everyone knows what Tesla is about. Electric cars, Elon Musk, guy that wants to put us on Mars. That stock over the last sort of 3, 5 months has just gone up and down, and then literally in the last sort of month or two has just skyrocketed, especially kind of understanding what's going on with them in the sense of the revenue, sort of all sort of good signs coming out of Tesla. They're hitting the revenue mark. There's talk of them joining the S&P 500, and they've met all the requirements to join them, and that sort of hyped up the price. And I mean, even at one point, I think Tesla hit something like the 1.6 price. Yes, 1.642 there, you can see on the 19th of July, and has slowly made a little bit of a decrease. But I think Tesla is a company that, yeah, there is a lot of hype, and I think I would agree that the price probably is maybe not so much at the 374, but definitely that 1.6 was probably slightly overpriced, and I think the hype kind of went into there. I do think if they are to join the S&P 500, and if that is announced, that will affect the price, and that will push that price up again. But at the moment, I just wanted to make sure that I had at least some money into Tesla. Again, like you can see there, I've got 0.1315 shares in Tesla, which is only £140. So I've got a very small holding in Tesla. But again, a company that is the future in many ways, is the future of travel and cars and automobiles in general. And obviously, we know that Tesla has become a major player in the car industry, even outshining the people like Ford who have been around for so many years. So Tesla definitely one for the future, and that's why I've decided to hold it a bit in there. Not a dividend yielding company, nothing like that, but definitely a growth stock that could go on to new heights over time. Then Tilray, I'm not really going to cover this too much. It's essentially just a stock that I got when I signed up for Trading 212. Someone used my share link, and I got Tilray. Nothing really to say. I think it's something to do with cannabis. Yeah, so a pharmaceutical cannabis product company. Sod's Law, the free share that I get. I mean, as you can see, back in 2018, this would have been a buy. I mean, look at that. And over time, it's just died out. The only reason I'm holding it is I'm hoping that it'll go back into the plus. I know technically the £5's £5 because I got the stock for free, but there's a part of me that's like, I can't sell that in the red, man. I can't sell it in the red. So I am going to hold it until it goes in the green, and then I'll sell it. Moving on. So third but last, well, three more to go. So Uber again was one of the first stocks that I bought. Uber again, a technology company at heart. I mean, it's been growing over the last sort of 3 or 4, 5 years as a sort of a go-to travel way. And I mean, obviously, we know that Uber's had its fair share of issues over sort of the last couple of years, obviously with the licensing side of things. But a company that, I fully appreciate is going to be the future and definitely the way of travel and the way it kind of gives people um, the way of kind of an income by being self-employed. And I think, yeah, for me, Uber is just a technology company that's gonna do well over a period of time, and are definitely going to be a growth stock for me as well. I mean, obviously, with everything going on with the virus and that, I think two things with that. I think one, Uber's really sort of made sure they diversified. So everything with like Uber Eats, for example, obviously people weren't able to go out, so takeaways and delivery food was the only option. So Uber, that's helped them balance it out a little bit, as well as what I see is people are still, although we can travel, in some ways, public transport, trains and buses and things, but I see Ubers being way more convenient. People feeling a lot more safer being in a car instead of being on public transport. And I feel that that's going to help Uber over the next sort of 6 months to a year, whatever, however long we have to continue to live the way we are. But I still Uber will be a preferred choice if it's a way of traveling if people need to travel. And so with that in mind, again, like I said, just generally I see Uber is a good company to invest in over a long period of time, and something that I'm going to personally be holding. As you can see, I've got a nice little return of about 17% there, with a return of about £14, and I've got currently 4 shares. Then moving down to the Vanguard S&P 500. Now, we all need a bit of diversity in our life. We all need to make sure that we've got our portfolio nice and diverse. And so that is what I've done. I've got the Vanguard S&P 500. I've got nearly 7 shares in there. And two things with here. Obviously, I'm looking for diversity. For those of you who don't know, the S&P 500 tracks, I think I even mentioned at the beginning, tracks the top 500 publicly traded companies in America. So by sort of buying into the S&P 500, I'm buying into 500 companies, allowing me to be very diverse. If a few of them, for whatever reason, tank and perform badly, there will be two others that perform better, and making sure that sort of the portfolio balances out quite nicely. So for me, I'm just going to be investing little by little into the S&P 500. If I'm honest, as an investor, I'm a lot more focused on diversity, as you can probably see. I'm looking at different industries, making sure I've got, a little bit of money in different companies than sort of putting loads of money into one and then not investing into another. So diversity for me is a big one, making sure that my portfolio is nice and diverse. So the S&P 500 obviously ticks that box definitely, and something that I will be kind of investing over a long period of time. And what's quite nice to see is obviously at the moment we can see a return of about 4%. But even if I return 7%, knowing that individual stock choices are sort of bettering that is quite nice to see, and so I'm able to compare that in my portfolio. And then finally, last but not least, I have Walt Disney. Now, Disney is, I mean, a company that, well, a brand, even an industry that I've known all my life. Disney has been a part of my life for many, many years, and a company and a brand that's very well known and renowned, and a company that for me is going to be around for a very long period of time, and has been and will continue to be around for a very long time. Now, obviously, everything going on with the virus has affected the stock price. Definitely, obviously, them having to shut all their theme parks, which is a massive part of the revenue that they produce, and having to shut them down has obviously affected the revenue and obviously affected their stock price, which is to be expected. Again, the reason I invested in them was not to do with their price today, but thinking about their price tomorrow and years to come. And obviously there will be a point where those parks can open. There will be some restrictions, but those parks will open, and that over time I can see the share price continuing to come back to the previous heights that we had before before the virus. So back in February, 142. And as you can see, actually over the last year, especially since March, that, peaks and troughs, but slowly but surely has sort of got back to those good old days that before the virus, as more kind of things open up. And as well, on top of that, is how their Disney Plus, obviously their rival to Netflix, their Disney Plus package has been doing, and has been sort of so many users downloading that, especially being indoors. So, that is a product, a different way that they're able to increase revenue. And once their theme parks and their attractions can open up alongside Disney Plus, I really do see Walt Disney as a stock growing, and being able to kind of um, get back to the prices they were at before. It was at one point obviously giving it a dividend return. They've obviously cut that for now, which is fine. I mean, obviously for me, my portfolio doesn't heavily rely on dividends, but obviously there is a flavour of it, and that's weaved into my portfolio. So, it's been cut for obvious reasons. And I've got other companies, dividend yielding companies, that I knew were going to be safer bets from that dividend perspective. But for me, Walt Disney was kind of more about, look, this stock price is undervalued at the moment for X, Y, and Z reasons that I gave. And that over time, like I said, I'm in it for the long game. And I can just see, based on brand alone and the company, that price will go back up eventually over time. So just looking at the allocation there, as you can see, I've got a total of 14 investments, and my portfolio valued at 2,162.67 now, apparently. And then obviously you can see that the breakdown of my percentage of different companies that I have invested in, and the breakdowns of those. Obviously, like I said earlier, Apple is a big one for me. That I'll continue to invest in, and why it's got the biggest percentage. Then obviously the Vanguard, for obvious reasons. Like I said, diversity is a big one for me. Then Walt Disney, Pinterest, and Southwest Airlines, and so on and so forth. So that is probably a very, very, very long video, but hopefully that gives you a bit more of an idea of my thought process behind some of the stock picks. Some of them had a lot more number crunching and a lot more research into them. Some were just like, you know what, I have a hunch. I think these are going to do well for whatever reason, and a company I believe in, so I'm going to invest. Obviously, do your due diligence, do your research, do your own homework, and only invest into companies that you either know about, believe in, or have done the research to back it up, worth investing into. But hopefully this has helped, and hopefully you've enjoyed this video. If you do want me to kind of go over any particular stock in more detail, or anything that I didn't cover that you want me to, just leave it down in the comment section below. As well, if you could leave a like on this video, that really helps me out. It helps get this video and this channel out to more people. But until next time, I'll speak to you guys later. Thanks for listening, and see you later. Bye.